everyone. Welcome back to another Fireside Chat episode as a precursor to the Global Strategy Nexus in Lagos for the 16th Council. I am Ishan Jasuja, as all of you know. Today, I have the pleasure of welcoming Andy, who's going to be one of the speakers at the Global Strategy Nexus. And we just wanted to take a few minutes to sit down with you and talk about the things that excite you about the summit and the area of expertise that you hold in financial markets and how financial market capital can help in solving Africa's many public governance challenges. So, if you could please start with an introduction of yourself.
Thank you so much for the opportunity of coming here to have this conversation on the capital markets and broadly on the mechanics of markets and how we can essentially figure out how to combine factors of production to advance prosperity and the broad African continent. I would say here is capital, as we know, remains a very critical and very fundamental factor of production. Africa has not necessarily developed a very strong system within that framework. We are still a continent of money. Everything here is done with money. And because of that, we've not done a really good capital formation. So this summit, I'm hoping, will give us that understanding, that capability, that knowledge system for people to understand that nations, continents cannot be built without capital formation. So myself, I'm a teacher and also an investor. I'm the CEO of many entities and participates in the broad entrepreneurial capitalism. And one of the key things we do is that we invest in young people. When we see very promising things, we give them and we support them in what they do. Thank you.
That's great. So I think we should begin with talking a little bit about the capital market situation in Africa, because that's something that's been part of global policy discourses, especially in the European Union, with them arguing for a capital market union pioneered by and advocated for by thinkers such as Mario Draghi with his Draghi report. What's the situation in Africa like? What are people talking about in terms of how the current capital markets operate? What's the infrastructure? How deep the capital markets are?
Yeah. So excluding maybe three countries, the Africa's capital markets, to the largest extent, is still at the level of infancy. And the level of development varies. For instance, the stock market in South Africa is worth more than $1 trillion. But if you go to Nigeria, in quotes, the largest economy or whatever it is, depending on the exchange rate you're using, the stock market is less than $70 billion. So you could see that just in South Africa, you're having $1 trillion, in Nigeria, you're having 270. You can see a massive level of disparity. So within that context, looking at Africa's capital market can actually create a lot of confusion because South Africa has done so many things right, while Nigeria has not necessarily done a lot of things. So the question now is this: what can these other countries, excluding South Africa, maybe Egypt, what can they do? Regulatory elements remain very critical. Capital is attracted where capital feels safe, where capital feels peaceful. And if you do not build your legal system very well, there is that tendency that capital will not actually make it a destination. Also, we need a lot of innovation in the way capital systems operate. We all of us are mainly focusing on equities. If you go to most of the stock exchanges in Africa, they are all just focusing on equities. We've not gone into the phase of derivatives. Even the bond market is still at the level of infancy because people don't really want to give you money for a very long time. So what we have seen is that the money market seems very dynamic, while the capital market is not very strong. And part of the reason is because of inflation, because of currency deterioration, that nobody wants to give you money for a very extended period of time because he or she does not know the implication on their currency. So this summit, I'm hoping that we can also help our policymakers understand that you don't really need to go to Britain and ask the British to come and invest in Botswana or invest in Nigeria. If you have not done some fundamental things right, that can actually help them see the opportunity within that particular market. So the development of capital market has many components. The rule of law, so that if there are issues of misunderstanding, the legal system will do what it has to do. Also, there is also an element of education. That education means that you have a stock exchange. Are people going to participate? They can only participate when they have trust in the system. You can't imagine that in the 21st century, there are so many African countries without a stock exchange. Why is that the case? Maybe nobody has created one, or they don't even have confidence that they can take their money, buy a piece of paper, and maybe in 10 years, they say, hey, I want to sell that piece of paper and then get my money back. We need to educate. And of course, we also need to bring technology and innovation so that simplicity, transparency, these things can be built within the capital market so that the velocity that I can buy, I can sell, these things will be optimized, just like the way you have it in London Stock Exchange, the way you have it in New York Stock Exchange, and across major markets in the world.
That's great insight. But I think one of the things that you hinted at in all of this was that capital markets are essentially vehicles and facilitators of investment. And what Africa and African countries need to do right now is make sure that there is something to invest in, because otherwise, what are you going to put your money in? So, if you could talk about those fundamentals a little bit more, I think that would help us identify the core problem and the core area that we need to work on.
Absolutely. So, the fledgling nature of our capital markets is so evident when you look at just equities mainly in most of these countries. But as you understand that from equities, you can get derivatives, you can get ETS, you can get ETP, you can get so many things within any specific capital market system. So the asset classes have not even evolved. People were not innovating on different asset classes. And because of lack of innovation within the asset classes, there are so many capital market makers. They don't really see what they can invest in. I mean, in London, many people are not buying equities. They focus on bonds. They focus on derivatives. They focus on ETF. They just focus on so many different classes of assets. In Africa, we don't have. And another thing also is the rules in the game. For example, you need to be profitable in most African exchanges to list. And what that means is Amazon would not have listed in most African stock exchanges because it wasn't profitable the time it went public. You need to be profitable for just like companies like Uber would not have qualified to list in Nigeria because Nigeria requires that you have to have for you to be IPO'd in the Nigeria Stock Exchange, you need to be profitable. So this makes sense of it has to be dividend paying. Dividend paying means you need to be profitable so that you can pay. It makes it that is so narrow that they don't see the big picture. So what needs to happen is we need to have new species of exchanges. Those new species of exchanges will now unlock new vistas of opportunity so that different market makers can say, hey, I'm interested in growth companies, even though they are not profitable. But I am confident that if they accumulate massive market share, one day they will be profitable. And if they become profitable, as category king companies, I'll make a lot of money. But it's not like I just have to be profitable even when I have an opportunity to grow more. Because it's really a business decision. I have a business in 2 states in Nigeria. I can generate a profit of maybe $2 million. I go public. But what if I want to move from 2 states to 10 states? And I'm funding that growth with that profit. Somebody says you don't qualify to be IPO'd because now you're no more profitable. So I am confident that we are going to see major drastic changes, and a couple of people, including myself, are pushing for new exchanges to list. And our vision is that we're going to see products in the area of digital assets, products in private placements. You know that private placements, when it is done in a very transparent way within the capital market, innovators and startups and entrepreneurs will actually have readily available capital for them to do what they have to do. But when it is not well structured, that is when you see all kinds of bad things happening. So we think that private placement is very fundamental. I also want to see commodities markets. Africa is a continent of commodities. Unfortunately, we don't really have any major exchange where you can trade these commodities. So you want to buy metals. Where do you buy them? It's possibly somewhere in Europe or somewhere in North America. But they are buying and trading metals that are harvested in Congo, DRC, and Kinshasa. That is not. So we think that making these options available will be very catalytic to the development of Africa's capital market. But I am not trivializing the challenges involved because of the legal system. Because, like I said, capital cannot sleep if it does not feel safe. So Africa has to deepen the regulatory elements and the legal ordinances so that we can actually have an opportunity to create some of these asset classes. So hopefully this summit will bring these conversations at a level that people understand the necessity of building such dynamic ecosystems for the continent.
Absolutely. And I wanted to touch upon the mobility of capital, something that you have hinted on. Because what is happening right now is countries in the global south, emerging market economies, of course, Africa as well, is good at attracting foreign investment when things are going well. But when there's uncertainty in the international markets, when geopolitical events take place or financial events take place, capital immediately reverses itself. The capital flows are reversed and it relocates to safer assets, say gold or the US dollar or American treasury bills or something like that, right? How do we solve this problem? Because this is something that is creating a lot of financial volatility in Africa and a lot of instability and recurring financial cycles.
Absolutely. That's a very great point. The fact is this: nobody can develop your land. There is this African axiom that if your father is sick, you abandon him. You don't expect another person to come and help him. So Africa, at the end of the day, has to figure out how its own people, its own citizens will help it to advance. The relationship between Africa and most external investors, that relationship is transactional. And that transactional nature of that relationship is that they come when the party is good. But as soon as they feel a little bit of friction, they leave because it's not their home. So if Nigeria is booming now, everybody comes. But as soon as they declare there is a little problem in Nigeria, everyone will flee. I give an example. Just before COVID, a lot of young people were raising tons of money in the startup world. Entrepreneurial optimism was so high. But you know what happened? After COVID, there was a little pause. Then the currency naira lost significant value. Everything disappeared. You don't blame those foreign investors because they are not running a charity. They are looking for value. And if you do not have it, they move to another destination. So the real part is, what can Africa do to now get people who really have interest in their long-term development and not transactional investors to actually come in? If somebody goes to my village in Nigeria, he said he's building a factory and he wants to go to the public market to raise capital. If there could be a structure where that is possible, if I have $1,000, I can invest in that company. Not necessarily because I'm going to make money on that 1,000, but I'm going to be motivated that if he's building a factory in my village, I've already gotten a lot of returns because he's going to help you develop my community. So when you look at it, there are a lot of incentives. If African diaspora and Africans can actually figure out a way to do some of this instead of depending on the foreigners. Nobody can blame anybody investing from London if he or she feels that the market is no more good and that person wants to leave. That is a rational thing to do. But you cannot wish for them to change their mind. You have to provide value if you really want them to come and play a long-term game. And I think it is what it takes. And I'm hoping also that as advancement in the interconnectedness of the global market continues, some of the perceptions the global investors have about Africa, some of those perceptions, they will now realize that's not necessarily the case. When you look at mainland Dangote, they are still raking in billions of dollars. So what is it that Dangote is doing other people can't do? It's not that because he's a Nigerian. Maybe he has a knowledge base that other rich people who can also invest in Nigeria from London, from Germany, are not picking up. So I'm very optimistic that the opportunities, since they are there, somebody will really figure out how to go for those opportunities. They are going to be foreigners or whether they are going to be locals. The opportunities cannot stay there forever.
We're talking about the impact on currencies, and I just wanted to dig a little bit deeper on that because all of these African economies mainly have their government debt denominated in foreign currencies. So when, due to capital flow reversals, currencies depreciate, the cost of servicing that debt goes through the roof. The effects that it has are beyond belief. So if you could talk to us about how that connection and those loopholes can be mitigated.
Absolutely. I think the biggest problem in Africa is currency, because without fixing the currency problems, you cannot even fix the investment climate. That I have money and I want to invest in a country. Most likely, I have that money in British pounds, the euros, or yen, or the dollars. I want, when I need that money back, converting from that local currency, that I have not lost significantly because of the currency deterioration. So take, for example, just about 2 years ago, Nigerian Naira was exchanging officially at about 415 Nigerian Naira to $1 US. Today, it's about 1,005 to $1 US. So if you look at it, you are looking at a factor of 3 within 2 years. If you have lost a factor of 3, there is no legitimate business anybody can do in Nigeria that will overcome that currency depreciation. So when an investor looks at that, the first thing there is, I can do well, but I'm going to lose when I convert that currency. Now, how do you solve that problem? Unfortunately, it's not a wish. You have to have a concrete plan. And that concrete plan means you have to improve your balance of payment and the balance of trade. And improving balance of payment and balance of trade, it doesn't come by wishing it. There needs to be a roadmap. Somebody has to do that. What is consistent across major global economies is that import is not necessarily bad. What is bad is what you import. Nigeria imports a lot of finished goods, but very few machinery and equipment. And as a result of that, our balance of trade, balance of payment, we're always having a lot of stress on the Naira. The Nigeria imports about $60 billion worth of stuff. But if you go to South Korea, they do multiples of that. But what they import, equipment and machinery, not finished goods. And the implication of that is that they have a highly productive economy in terms of semiconductors, technology. So they do better. Africa needs to look at how we can make things. Recently I wrote an article, I said, African leaders should go to Trump on what it means to have a fanatical love of a country. Because he says, if you don't make things in America, I'm going to put a tariff on you. You may not like him. He doesn't care. Or he says, if you want to sell to Americans, come and build a factory in America. Can Nigeria do A little bit of that. We don't have the same leverage that United States government has. But Nigeria has one. It has 230 million people. Because right now, those companies actually like the Nigerian market. That is why when they shut down their factories, they still put a press release. Oh, we have shut down our factories in Nigeria, but we will still be selling our products in Nigeria by now importing those products from outside Nigeria and be distributing to Nigerian customers. That means they know that the demand is there. The only thing they are avoiding is making things in Nigeria because the custom systems in Nigeria doesn't penalize them for importing and distributing those things. If they have maybe somebody like me, I'm going to put 100% tariffs so that you will be forced to make things in Nigeria. And you know what's interesting? If you force them to make things in Nigeria, there might be a pain over 6 months. You just tell the citizen, listen, your children don't have jobs after finishing from college because all the factories are gone. But we have put 100% tariff, no tariff on machine and equipment, tariff on finished goods, so that we make sure, the implication Africa has to defend their currencies. And defending currency comes through improving productivity. And that comes through import substitution. And that comes through making sure you have capacity to at least make most of the things you use. If we do those, currency will improve. And if currency improves, investment climate will improve because investors can now think long term. If you own a bank in most African countries, you will be naive to give somebody a loan that will be more than 6 months. Why would you give somebody a loan that's more than 6 months? Because the currency can just depreciate over 3 months. So everything now is shut down. But if the currency is stable, you can now fund bridges, fund airports, fund roads, because stability of currency gives you the opportunity to think long term, even as a lender.
That's a very good point, and I completely relate to it because in India, at least in the nascent stages of our development, we had unbelievable import-substituted industrialization. Tariffs were high. People wanted to get into our markets from foreign countries. They couldn't because they were not able to get past the massive tariff numbers that we imposed on imports. And that has really helped us become a part of a global economy where we can have an equal place in the sun, if I can say so. And so has South Korea and so has Japan with the national champion strategy. So that's something, as you rightly pointed out, African countries can apply probably. And of course, we look forward to having these discussions in the conference in Lagos. One thing that you're most excited about the upcoming summit?
Yeah, I'm just so excited because this is going to be a summit where there will be multidisciplinary evaluation of some of these issues. When you bring these subject matter experts from different fields of endeavors, you can now have the capacity, at least both the policymakers and industry operators, to see things in the way things should be seen. I keep asking myself, how can South Africa have a stock exchange valued at more than $1 trillion when Nigeria is less than 70 billion? And then there are still people telling me that the Nigerian economy is bigger. It's like South Africa is 1/3 of Nigeria's population. How did they do that? South Africa is not in Europe. It's not in North America. It's not in Asia. So whatever it did means it can be done in the continent. Because if you move the 70 billion wealth in the stock exchange in Nigeria to 1 trillion, you have created a factor of at least 10 value. That means more money for everyone, more wealth for families, and people feel confident. Also means you don't even need European investors and American investors because you've given it a factor at least 70 billion to 700 billion. But when you still leave that 70 billion to remain, because people are not even aware of this comparison. If you ask most people, They don't even know the gap South Africa has on other African countries. So I would say, let's not talk to the Europeans, let's talk to the Americans. We already have South Africa that made this thing to work. What are the asset classes in South Africa? What are the rules in the game that made it possible for them to create this massive level of value? What are the things they are doing while they continue to have that level of activity? So if we can just mimic this and get 10x on all the exchanges, you don't need a banker from London to come and develop anything in Ghana. Because if these current capital markets are well optimized, I think each of them should at least have a 10x appreciation. And that 10x appreciation is optimal considering that I'm thinking that South Africa has stabilized. But even look at India situation. Everyone expects in the next decade, just like the way we're discussing China today, that's the league that India will be at. And it's ramping up a massive level of GDP growth. It's showing a very confident middle class. And everyone wants to participate in the Indian Renaissance because people like where the actions are. And the leadership is so bullish on the future of the country. And whenever you have all those combinations, what happens here? You get into a cycle. One good thing will lead to another good thing. Another good thing will lead to another thing. You can't even stop it. But the most important thing is to get into that loop. So this summit has an obligation to bring the academia, to bring the technocrats, to bring the industry players and the policymakers so that we can figure out a framework to get Africa into that loop that we can. And I also want to mention that as we look at this, we also look at what artificial intelligence can do in the capital market. I predict that in the next 5 years, most software as a service companies in Africa, if they do not transmute by evolving into AI-ready companies, most of them will expire. In other words, some of the current startups we have in the software domain, if they don't do what they have to do, AI will just make them obsolete. So that is also a risk in the capital market. That is going to be one of the challenges that we are going to face over the next few years. And I'm hoping that we also bring this AI impact on Africa's capital markets, because the destruction of value for companies that cannot transmute will be extremely devastating to young people because jobs will not be available there.
I agree. And you've given us plenty to look forward to for the summit. I am extremely excited to meet positive change makers such as yourself with the go-getter attitude. I'm pretty sure we're going to turn it around like nobody's ever seen before. There's going to be a lot of excitement in and around the summit, a lot of positive change coming from it. And let's just hope that we can welcome as many of our audience members as possible, because we've got a lot of work to do and we're going to do all of it together as a team. So thank you for taking the time to see us today. We look forward to meeting you at the summit. I look forward to meeting you at the summit, and have a very nice day.
Thank you, Sean.